Good afternoon, everyone. Welcome to the Federal CARES Act webinar. We are all getting used to working from home, and it's 2 o'clock on the dot, and you can probably hear my little clock chiming away. I wanted to say thank you so much for joining us. We are honored to welcome Brince Manning, the Southeastern Region Manager for the US Chamber of Commerce. Unlike it says below me, my picture there, I am not Katie Worthington, President of the Greater Winter Haven Chamber of Commerce. I am pleased to tell you that Katie Worthington just brought another human being into the world, and her little boy are doing very, very well. So she would, those of you that know Katie know that she would have done anything to be on this call, but even she can't delay nature. So she sends her love, and I know that you all send her best wishes for her and Carter. I am Amanda Jo Nicholson. I am Vice President of the Winter Haven Chamber of Commerce, and I would especially like to thank and acknowledge Corey Skeets, who is President over at the Lakeland Chamber of Commerce, for collaborating with us and for bringing this webinar to Polk County and to our business leaders. Today, Brince will discuss with you the CARES Act and how the various loans and provisions within that legislation can help benefit your business. But before we begin, I want to just go over some rules. We have more than 100 people on the call, and so there will be time for questions at the end, but for ease of management of the sound on the call, everybody is muted right now. My colleague, Karen Spear, is monitoring the chat room. So if you have a question or you would like to raise a point, please hit the little chat button at the bottom of your screen and type in your question. You can either flag that just directly for Karen Spear, or you can have that to everybody, and she will then relay those questions to Bryce. The call will be recorded, and so we will upload that once we are finished, and so you'll be able to then access that via ours and Corey's website. I know that many of you may have questions about our governor's Safer at Home executive order, which was issued yesterday, and I know that Corey and I are sending out more details as we receive them on this. But this call is about the Federal CARES Act, and to be mindful of everybody's time, please limit your questions and comments to as they pertain to the CARES Act. So without further ceremony, I'm going to hand the webinar over to Brince. Brince, over to you.
Awesome. Well, thank you so much. And thank you all for joining. This is obviously a very important and I imagine stressful time if you own a business, and for local chambers as well. So just to give you an idea of the CARES Act, this is a $2 trillion package, which is just under 10% of our regular GDP in our country. This package is designed to be robust because the idea is that this bridge will help us avoid a prolonged recession and an economic downturn, and will allow us to resume regular commerce quicker than otherwise. So in addition to the $2 trillion in face value of the package, because some of the funds can be used by the Federal Reserve, it can be leveraged to provide an additional $4 trillion in support for the economy. We'll talk a little bit about the individual provisions, perhaps the most important being the automatic payments that the federal government is making to individual taxpayers, which I'm sure y'all are well aware of. They will begin the process, I think you'll get them in about 2 weeks. They'll begin the process of direct depositing across the country. The amount is $1,200 for an individual, $2,400 for joint returns, plus $500 for children per child. And it begins to phase out for incomes over $75,000 and $150,000 for joint incomes. We already know, as you saw last week, 3 million new unemployment claims. And as much as we may support business, we're going to have a rise in unemployment regardless of really anything else. But with that comes some robust expansions of unemployment benefits, most importantly, restrictions on eligibility for unemployment. Remember, If you go through unemployment, applying for assistance, there are all these qualifications about how long you've been employed, how long you've been unemployed or employed, how long you have to wait, etc. These eligibility requirements have been amended as it's related to the coronavirus. In addition, the federal government is providing another $600 on top of the regular state benefits through July the 31st. States simply have to agree to accept this additional benefit for their residents, and I'd be kind of surprised if a single state did not accept it. A lot of questions have come up about whether or not individuals will remain on unemployment, particularly given the enhanced benefit. So it's important to remember that eligibility ends as soon as the individual can return to work. So if an employer is reopening and calling employees back, and that employee is available to work and they choose not to work, then their individual eligibility ends. How do you access this? This still goes through your state unemployment office, not the federal government. So you need to go through your state, Florida. All right, major provisions for the employer side. Next slide. Sorry, my boss is calling me here. So let's talk about the major provisions for employers. We've really broken them down into three groups: the provisions that are available to all employers, the ones that are available to larger employers, and the ones that are available for small business, self-employed, independent contractors, and nonprofits. And we're going to spend most of our time on the small business and self-employed, et cetera. We'll start with the provisions that are available to all of the employees. The first is a payroll tax provision for employers who pay payroll taxes. So think about this. Everyone who writes a check to their employee, after you write that check, you normally have to write another one to pay to the federal government to cover the payroll taxes for both the employee and the employer side. Under this bill, an employer may choose to delay the payment of their portion, the employer portion of the payroll tax, which is 6.2% of Social Security wages. They can delay paying that between now and January 1 of 2021. If they choose to delay that, they have to pay 50% of the accumulated amounts that they would have owed by December the 31st, 2021, and the other 50% December 31st of 2022. There is an important caveat here. This generally is available to all employers, except if you had a loan forgiven under the Paycheck Protection program, this small business loan that we're about to talk about shortly. Other tax changes that are important: net operating losses, or NOLs. If you have a business who has an operating loss and you want to be able to use that against prior taxes paid, now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. Also applies to pass-throughs and sole proprietors. If you're a business, this is primarily for corporations that have AMT credits, and you can accelerate the recovery of those. You may also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made improvements to their investments and improvements into their property, they can accelerate the recovery of that as well. All of these provisions are really centered on one idea: improving liquidity for employers. At the moment, when employers have no revenue coming in, it's hard to pay the bills, as you know, and so all these provisions are trying to create that greater access to liquidity. It's not so much about reducing overall taxes, it's more about timing, giving employers more access to cash they have today to be able to pay their employees. Another provision that's available to all employers is the employee retention credit. Now, this was a late addition to the bill. The early drafts did not have this, so it hasn't been getting a ton of attention. But we're talking about businesses. Also nonprofits, for example, who are fully or partially shut down as a result of the coronavirus, or have a 50% drop in their gross receipts in a quarter, and they're eligible for this until the gross receipts get back up to 80% of their prior year's amounts. So think about this. This is designed to help employers who've shut down or lost revenue, but who continue to pay their employees. How much is the tax credit worth? It's 50% of the wages paid by the employer, up to $10,000 per employee. That's fully taxed. That's a fully refundable tax credit. So think about it as a $5,000 tax credit available to the employer. There are special rules also for employers with more than 100 employees and employers with less than 100 employees. If you have more than 100 employees, the benefit only applies to employees who are paying, who you are paying, but are not providing services. So think about it this way. Your business is shut down. You've had this drop in revenue. Your employees are not working. They're not teleworking, but you continue to pay them. You can access this credit as a benefit in recognition of the fact that you have paid them or are paying them. If you have 100 or less employees, the requirement that they not be providing service does not apply. It's available to all employees you pay during the eligible period. The eligible period being when you're shut down or when you have a quarter with this drop in gross receipts relative to the prior year. Importantly, again here, the Paycheck Protection Program, this is the small business loan / grant program. If you receive one of these loans, because it can be converted into a grant, you cannot take advantage of the employee retention credit. We understand that employees may have cash flow problems, and one of the things for employers, I may have said employees, I meant employers. We understand that employers have cash flow problems, and one of the things for employers who take advantage of this is we expect the Treasury Department will be providing guidance with that that will allow employers to get an advance on the payment of the credit, which will help them pay employees today. All right, let's talk about the mid-size and larger employees. This bill includes in total $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Reserve credit facilities. If you don't know, Federal Reserve credit facilities, you may have read about them in the paper, but they are these things that the Federal Reserve is creating, and for example, to support commercial paper, money market funds. They do this as a regular course of business when we're facing a financial crisis. They use these a lot in 2008. 454 billion of that 500 is directly for businesses at large. There are special programs for the airline industry and critical national security businesses that make up the remainder, I guess, the other 46 billion. We expect in the coming days, we'll see the Federal Reserve issue more guidance. We're expecting that by the end of the week about these credit facilities and actually launch them, including the terms and conditions. Remember, this is not going to be a situation most likely where the company goes directly to the Treasury Department or the Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the U.S. to make them more loans available. So they're going to expand the number of lenders to make it easier to access these loans / grants. There are some restrictions that go along with this in exchange for accepting the benefit that could include stock buybacks by the company, so long as their loans are pending, and for an additional year, limits could be placed on increasing executive compensation. So, all right, so let's move to small businesses, self-employed, independent contractors, and nonprofits. This is where we're going to spend the bulk of our time on the small business and self-employed. This provision that's getting the most attention is called the Paycheck Protection Program. It's $349 billion in loans for small businesses. It's generally defined as employers with less than 500 employees. 501c3s, the self-employed, sole proprietors, and independent contractors. A way of thinking about this, if your business is generally qualified for an SBA program, you're going to qualify for this program. In addition to that, some employers, some businesses who would not qualify have been added to the list. This includes, for example, independent contractors and the self-employed. It also includes restaurants and hotel folks who would otherwise be ineligible because if you add up all the locations, they have more than 500 employees. Under this bill, it says we're going to judge you in the accommodation and in the food service business on a per location basis. So don't assume that because you're not eligible for a regular SBA program, that you're not eligible for the Paycheck Protection Program. You may be. How much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. There's a formula to calculate average monthly payroll. And once that is calculated, you just multiply it by 2.5, except the loan cannot exceed 10 million. Where will you get the loan? A lot of folks are asking, do we go to the SBA? No, we don't think you're going to go. In fact, we know you're not going to go to the SBA to get these loans. You're going to go to your local and national lenders who are already SBA 7A lenders, and they participate in that program, are automatically qualified to provide these loans. And tomorrow, the Treasury Secretary is going to announce a list of additional lenders as well. It's our belief in the next couple of days, so we're going to see a generous list of lenders because this is a program that is backed 100% by the federal government. There are very minimal requirements as far as underwriting these loans. There's no collateral required, no personal guarantee. There's a unique feature of these loans that it can convert into grants based on what the borrower spends the money on. So the way the bill is laid out, it looks at the 8 weeks of your expenses after the date of the origination of the loan, and you get to tally up everything that you spent on payroll, that you spent on rent, for example, interest on mortgages that are tied to the business, what you spend on utilities, and you can get dollar for dollar forgiveness of your loan up to that amount. Of course, you can't, your forgiveness can't exceed the amount that you borrowed, but it can be 100% fully forgiven. There are some conditions. Your loan forgiveness is reduced proportionately if you reduce the number of FTEs that you had relative to a benchmark period, either the year before or the first 2 months of this year. The loan forgiveness is also reduced if your wages for employees making less than, if you reduce wages for employees making less than 100,000 by more than 25%. That's a good note about employees that do make more than 100,000. In your calculation of payroll expenses, you get to count the first $100,000 that you paid an employee, but nothing beyond that. So this is really targeted at those middle income earners. Employers can also avoid a reduction in the forgiveness because we know a lot of employers have to lay people off. If they bring employees back and restore their wages by June the 30th of this year, that is a way you can avoid the reduction in forgiveness. So think of it this way: you've laid off employees or you've reduced wages or hours to help get you through this period of time. If you made those reductions between February 15 and April 26 of this year, you'll need to restore those employers and/or bring them back up to their previous wages by June the 30th in order for your loan to be forgiven, to convert into a grant. Additionally, after April the 26th, you cannot make any changes to your number of employees or wages until after June 30th. They want you to maintain your payroll until June 30th for this to really work. If you've laid off an employee or reduced hours prior to February 15 of this year, you do not have to restore them to qualify for forgiveness. We often get asked, what if the business is shut down, or what if you're in an area like Florida where the governor said essential businesses can't open, or a lot of businesses can't open. That doesn't matter for this purpose. What the loan is looking at is after you take the loan, were you paying your employees? That is the goal of this whole bill, is to keep paychecks flowing. Remember, so the goal, they want to keep small businesses going. That's plain and simple. Okay, so to learn more about the Paycheck Protection Plan, I do encourage you to check out this website. There's a 4-page document that talks about, am I eligible? What will lenders be looking for? How much can I borrow? It tells you how to calculate the 2.5-month payroll average or monthly payroll average. And also, when will this loan be forgiven? It's a pretty good document. I encourage you to check it out. Okay, so one of the things that we're doing at the U.S. Chamber is encouraging small businesses to understand whether they're eligible for this program and think about what loan forgiveness might look like in your situation, and on the back end as you make a decision on whether or not to apply for one of these loans or grants. Okay, another provision that benefits small businesses, the self-employed, independent contractors, and nonprofits is the SBA's Economic Injury Disaster Loans, also known as EIDL loans, which you are probably familiar with. They've been around for decades. It's something that you may know about if you've been affected by a hurricane or a tornado. You may have applied for an EIDL loan as a result. Who is eligible? Small businesses and nonprofits, including faith-based. No restrictions here on the type of nonprofit. Chambers are included. It's an entity that is a nonprofit the nonprofits that have fewer than 500 employees. And again, sole proprietors and independent contractors are included. So this is an actual loan. This is not a loan in general that will convert to a grant, unlike the Paycheck Protection Program. You can borrow up to $2 million in working capital that's repaid over 30 years. And you see the interest rates here. If you take out this loan, payments are deferred for up to a year, so you don't have to immediately start paying on this loan. They made it easier for individual businesses to apply. Your loan is going to be based on your credit score. You don't have to immediately produce tax returns. You can get up to $200,000 without a personal guarantee, and no collateral is required for $25,000 or less. Beyond that, there's a general security interest, or sometimes it's secured by real estate, but they're trying to actually move away from the real estate in this particular case. There is an important feature that is brand new as a result of the CARES Act. If you're applying for an EIDL loan, one of these injury disaster loans, you can request that you be provided an emergency grant which they have to provide within 3 days of up to $10,000. The bill details what you may use the grant for, but there are no requirements really. This $10,000 grant does not have to be repaid even if you are denied the loan. So if you apply for the loan, you request the emergency grant, you receive it, and then you're denied the loan, you don't have to pay back the $10,000. You should think of it as basically an emergency grant for small businesses. There are some important interactions with the Paycheck Protection Program that we just talked about. Importantly, for example, if you end up with both, and you generally would end up with both because you've already gotten the EIDL loan, and maybe now that the Paycheck Protection laws are being set up, you're applying for those, you can roll those together, but you can't get double forgiveness. The $10,000 would come off of the Paycheck Protection Plan's forgiveness. There's also some requirements with respect to the Paycheck Protection loans that you can't double dip. In other words, you can't take out two loans to pay the same bills. If you're thinking about both of these, you're going to want to think through those restrictions. Don't assume that you can do all of these programs and just stack them up. What they have done is make the Paycheck Protection Program the most favorable by far, and then tacked on other programs that don't avail themselves of the Paycheck Protection loan, and that includes this EIDL loan. You don't apply for this by going to your local bank. This is through the SBA. So you would go to sba.gov, or you would talk to your SBDC rep, or whoever's in your region. This is, again, open to 501c6s. Chambers can also receive the employee retention credit, but they have to be substantially shut down, or that reduction in revenue relative to the prior period. So you'll want to think through that with the folks that do your taxes. Okay, on to paid sick leave. Now, with respect to small businesses, there are some provisions we've received a lot of questions about that don't come from the CARES Act. They come from the Families First Act, which was the previous bill known as Phase 2. What the Phase 2 bill includes was a requirement that employers with less than 500 employees provide paid sick leave, 10 days of paid sick leave to all their employees if it's related to the coronavirus. Sick leave is taken when you're ill, when you're quarantined, if you need to take care of a family member who is quarantined, or if you're taking care of a child because of school or daycare closures. Leave is paid at your regular rate, but it's for a maximum of 511 per day, unless you're taking care of a family member, and then it's 2/3 the regular rate with a maximum of 200 per day. Importantly, the federal government will reimburse employers 100% of those costs up to the daily maximum that you pay your employees. This is a refundable tax credit, and understanding that businesses often have liquidity problems as well, the Treasury Department is taking steps to allow businesses to request an advance on the refundable credit so that you have the resources to pay your employees who are taking the sick leave. This is in addition to what employers are already, what the employer already provides, including what you provide pursuant to state or local law. There's a lot of talk about businesses with fewer than 50 employees being exempt. The law does provide that an employer may be exempt, but they can only be exempt with respect to leave that's tied to caring for a child whose school or daycare is closed, and only to the extent that if providing the leave threatens the viability of the business. If you think this applies to you, you should check out the Department of Labor's guidelines. They're posting on their website, and they will provide much more information and probably clarity. Finally, paid sick leave is generally not available to an employee where they can telework. This only applies if the employee is taking care of, for example, a child, and they can also telework, for example, by staggering or changing their hours. Okay, on to the FMLA, sorry. This is the Family Medical Leave Act. This was also from Phase 2, the previous bill. It's a law that generally applies for 12 weeks of unpaid leave. What the Phase 2 bill did say that with employers with less than 500 employees, they are required to provide up to 10 weeks of paid family leave if the employee needs to take care of a child due to a school or daycare or childcare closure caused by the coronavirus. That's the only reason for the extended leave. When you think about the interaction between this and the sick leave, an employee would take 10 days of sick leave first and then be eligible for the up to 10 weeks of paid leave. Here, leave is paid at 2/3 the regular rate, again, maximum $200 a day, $10,000 in the aggregate. It's in addition to what you already provide under state and local law. Again, it's fully reimbursed by in the same way by the federal government. There are similar exemptions for employers with fewer than 50 employees, same as paid sick leave, and it does not apply to an employee who can telework. So their next slide is basically just more information. The uschamber.com has all these resources and more, including bill summaries, and particularly you'll see the website there, a chamber program that focuses on small businesses, has survival guides, tips, and other things that are available for small businesses. Again, you see the website, and that's pretty much all I have. Happy to try to answer any questions. Now, to be fair, if you're thinking about any of these loans or grants, you're going to want to talk to your lender. Obviously, you're going to want to run the numbers several times, different ways. So the SBA or the lender are going to be the experts on this. But I'll try to answer any questions y'all have.
Thank you so much, Brince. I'll just give Karen a second here to collate anything she's seen in chat. I had a couple of questions that were raised to me earlier today that I figured may be useful for some folks that might be on the call. I was asked, does a business have to have been in existence for more than 12 months? We have a restaurant that wasn't open 12 months ago, to specifically looking at the payroll protection side.
No, no, and if it wasn't, so there are two ways to figure out your monthly payroll costs. One is you can take the entire 2019 year and figure it out that way, or you can look at the January and February of this year and configure it that way. If you look back right in the middle, I put a website, uschamber.com/SB-loans. That's that 4-page document, and it will help you figure out, and it lays out how to tally your payroll costs. And it includes tips. If employees are depending on tips, it includes that. I mean, it's a pretty good document. I think that'll help folks.
I do too. Thank you so much. And I think that's useful for everybody to know. And then the only other question that I had asked that you haven't specifically covered that I'd like you to raise for everybody is, are there any entities out there who, if we have a business owner who is looking at, okay, which way do I go? Do I look at the SBA side? Do I look at the payroll protection side? What's the best way for me to go? Are there any entities out there that are designed specifically to help them decide which is the best way for them?
I don't think there's anybody out there that will tell a business which way to go. I do know that if I owned a business, I would look strongly at the Paycheck Protection program first, just because if you think about it, you're looking at a bunch of free money if you do it right. The other one is not nearly as generous in terms of forgiveness.
Sure.
So, but don't listen to a DC lobbyist. I mean, I
I appreciate your viewpoint. That was similar to my answer too, and but with lots of caveats of, in my opinion, but sure thing.
So the business owners need to, again, run the numbers several different ways. They need to talk to They need to talk to whoever does payroll. They need to talk to the SBA, and they need to talk to their lender, really.
Yeah.
See what is most beneficial, because every case is different.
Absolutely. Absolutely. I'm going to unmute Karen, just because I know we've had some questions in the chat room. So Karen.
Thank you. Can you hear me?
Yep.
Yeah.
Okay, great. Thank you. So we've had a few questions that came in earlier. One of the questions was, we have a small business that purchased the business on February 28th. They just want to verify that they can, in fact, qualify for the Paycheck Protection Program.
I believe so, yes.
Yes. Okay, thank you. We have another member that has applied for the earlier loan that you mentioned, where he is supposed to receive an advance of $10,000 within the first 3 days.
Yep.
And he's just asking if we know if that is happening, if they are in fact receiving them within 3 days. Apparently he has not received it as of yet.
You know, I don't know. I was under the impression that things really started rolling along at the pace that they want to go, starting like today or really tomorrow. So I would expect, I would hold them more to the 3-day thing starting tomorrow if I were you.
Perfect, thank you.
Just because they rolled this out, and then the Treasury Secretary is like figuring out as he's going, and like he wasn't even identifying certain lenders until tomorrow. So I don't think they're fully up and running until tomorrow was the target.
Okay, thank you.
Karen, what else do we have coming in?
Looks like we just had one come in. Are religious organizations eligible for the Paycheck Protection Program if they are a 501c3?
Yes.
Thank you.
And just so chamber folks here know, we're trying to get the fix to that for 501c6s in the phase 4 bill. There will be more bills, believe it or not. We pushed it. We got a lot of support. I think 1,400 chambers signed on to a letter in about 2.5 hours last Tuesday, maybe. And like that, the subject wasn't even being discussed until we raised the issue. So we're going to keep the pedal to the metal for our chambers.
Y'all did a great job.
Okay, and it looks like we have another couple of questions that have come in. Are the Paycheck Protection Program approved banks each receiving a limited amount that they're able to fund?
No.
Thank you.
There is no limit.
Okay, do I have to keep the same employees until June 30th under the payroll protection, or just the same amount of FTEs?
Oh, that is a
Good question.
Yeah.
Very good question.
Don't know that, but I will figure out the answer, and I'll send it to Katie, Amanda, Joe, whoever.
Yeah.
Perfect, thank you. Do you have any specifics around the documentation required to have the PPP loan forgiven? I have heard it may be cumbersome.
I'm sorry, I missed that first part.
That's okay. Do you have any specifics around the documentation required to have the PPP loan forgiven? I have heard that it may be cumbersome.
I have not heard that it's cumbersome. I don't know the documents. I haven't looked at the application, but from my understanding, they want this to be as simple and as smooth a process as possible.
Okay, thank you.
In fact, the Treasury Secretary, I don't know if I mentioned this earlier, he told lawmakers throughout the process, he wants it to be as simple as going in one morning, requesting the loan, and getting the money that evening. I mean, he wants it to be as quick a process as possible. So I would not expect anything cumbersome or burdensome from this.
Okay, we have a few more. Can you tell me what the transportation listed under utilities in the PPP plan will pay? Gas, insurance, that type of thing, or?
I don't know if it covers that. I'll have to look that up. I'm not sure. I'm sorry.
That's okay.
Karen, will you just take a note of the folks who specifically asked that question, because then Corey and I can field that information back out to them specifically.
Sure.
Thank you.
How does the PPP work for self-employed and 1099 employees?
It's going to work. It's going to work just like a sole proprietor or independent contractor.
Thank you. Sorry, I'm just reading through to see the ones that have not been addressed already. Is forgiveness based on the total spent for nonprofits, even if grants are involved, or will it only be for unfunded expenses?
You guys are killing me here.
Great questions.
That is a good one. I assume, I doubt it takes into account grants.
Okay.
But if y'all will send me that, I'll look that up as well.
How important are balance sheets and income statements in the approval process?
I don't think that I don't think it is. I don't think that's the biggest thing they're looking at, to be honest. It shouldn't be. It shouldn't. That shouldn't be a hang up, based on what I'm hearing.
Okay, great. And it looks like maybe the last question we have is, if a FTE resigns by choice, do you have to replace them if they are not needed, just to keep your numbers the same?
I don't think that would count against you. I will verify that. That should not count against the business. But
Okay.
I'll confirm.
Thank you. And we do have one final one. It looks like, if you regularly employ contract workers, can they be considered under payroll? If not, are sole proprietors eligible to be forgiven for PPP if they are not writing themselves a paycheck?
Yeah, so the contract workers do count towards payroll.
Okay. Perfect. And we had one more come in. Is the 12-month payroll period for the year of 2019 or the 12 months prior to apply, or 12 months prior to applying?
No, are you talking about for the Paycheck Protection Program?
I believe that's what she's referring to.
No, so there are two ways to figure it out, to figure out what your monthly payroll costs are. It's either all of 2019, or like for businesses that either were closed for part of 19 or weren't even around in 19, you can also factor it by using January and February to find that number.
Perfect, thank you. Does the business structure matter? For example, a C corporation versus an S corporation?
I don't believe that matters. That's something I'll check on. I have not heard that being an issue.
Okay, thank you. And do 2 part-time employees count as 1 full-time employee?
Yes.
Yes, okay, thank you. And it looks like we just got another question asking for the questions that we were not able to answer. How will we reach out to the parties to get answers to them?
So if I jump in, and Corey's right here, so he's going to either give me a thumbs up or not. But what we'll have Brince do is send Corey and I the answers to the questions, and then we'll place those out on our communications with this when we post the video, the webinar up on the websites. Corey, is that going to work for you too? Perfect. So once we get those answers, we'll make sure they're in there with the with the recording of this. searching for the word recording then, with the recording of this. So we'll get those out there, and so everybody can look and see. The idea is that as many people can benefit from this information as possible. So if there are no more questions, Karen, did we get to everybody's questions? Yep, I think we covered everybody. Now, Karen, did anything else pop in? Perfect. So I will say thank you again to Brince. I know that this is a changing by I was going to say changing by the hour, but changing by the minute situation oftentimes. And I know that it's uncertain times for everybody right now. So we are all here for you. Our colleagues over at the Lakeland Chamber, us at the Winter Haven Chamber, and our fellow chambers across the county. Thank you, Brince, for taking the time to come in and do this for us. We really, truly appreciate it. We will get this out there and disseminate this information as best as we can. To all of you that signed on today to this call, thank you so much. We are wishing you all the best. We are here with you every step of the way. And if there's anything that your chambers can do for you, then please do let us know. And with that, we'll end the meeting. Thank you all so very, very much.
Thank you all.